Hi, I'm Brooke Thackeray. Today we're going to take a look at what happened in the markets last week. It was really concentrated in a few sectors of the market, the price action. Let's start by taking a look at the S&P 500. If we take a look at the S&P 500 here, you can see that we're still in this upward trend channel. That's good news, with an all-time high being extended to another all-time high as well. Can't complain with that overall, especially when we're in that trend channel moving higher. Volume is a little bit weak here, as I mentioned before. A little bit of concern saying there's not a lot of conviction, but the market can climb a wall of worry, of course. Given that we're reaching all-time highs, really nothing to complain about as far as that goes. If we take a look at the price action for last week, we can see here Monday we had a big up day. On Tuesday, we saw a negative day in the marketplace. Wednesday was, look at the price movement from the high to the low. It was actually quite large, and it was down for the overall. Here was the open and here was the close. But lots of price movement. Powell spoke that day as well. Investors were really trying to reposition it a little bit. And next day, look at Thursday. Big price movement once again, and during the day on an intraday basis, but open and close, really not much at all. Thursday, I should say Friday, we saw that price action taking place here, which was this action here really took place in the last half hour, 3/4 of an hour of the day, where the market just moved up as investors piled into the market on a risk on, saying, I want to be in there for next week. I want to pile in before the holiday. And that's exactly what took place. If we take a look at the overall markets, the S&P 500 up 1.2% for the week. Emerging markets 2.8%. Emerging markets benefiting from that risk-on move and also a little bit from the U.S. dollar weakening as well. The Russell 2000 definitely benefited from the risk-on move at more than doubling the S&P 500. And if we take a look at the TSX Composite Index outperforming the S&P 500, that was largely based upon energy. And if you take a look at energy in the States, this is in the U.S. market, was up almost 5% last week. Just a huge move as investors really came into that sector. We've seen some real big draws coming out of crude stock inventory as well, and so investors are really trying to position themselves for that. Financials benefited as interest rates moved higher, and also there's a risk-on environment. Utilities, exactly the opposite. They obviously got hurt by higher rates and risk-on. The other defensives, healthcare, and consumer staples. In fact, consumer staples was actually negative last week in the marketplace. Investors really didn't want to be in the defensive sectors overall in the market. This is an interesting one. If we look at some of the selected subsectors, the technology sector here, the semiconductor sector performed almost 8% last week. That was based upon a chip shortage that's taken place, and investors have just rushed into the sector. Just want to make a note that gold came in up 0.5 percentage point. Silver 1.4%, silver outperforming gold, and it makes sense a little bit too. There's been a lot of talk about what's taking place in the markets overall with the short squeeze. It's still sort of taking place. There's still some talk about it, and investors are still trying to focus on that and get that going a little bit. But more importantly, last week we did see the metals and mining sector and the steel sector outperform the market. And when that happens, at the same time gold goes up, silver tends to go up higher on average over the long term. If we take a look at the VIX last week, and the reason why I'm bringing up the VIX is we did see this rally here, not a rally, but this close below 20, which means that this is a real shift to risk-on mode in the marketplace. And the last time that we saw that value was really as the pandemic was just starting to unfold. So we've seen the VIX come below 20 for the first time in a long time as investors have really moved into risk-on mode. It doesn't mean it can't move up higher from here, but it just generally means overall that investors have this have less fear of the overall markets as well. And if we take a look at the spikes, we have seen some corrections that have taken place for the S&P 500, which is this panel here as well. But let's see if we can stay below 20 overall, which would help to support higher market movements. If we take a look at the Canadian dollar versus the US dollar, you can see here since late 2020, we've seen the Canadian dollar fairly flat relative to the US dollar, but we did see this uptick last week for the Canadian dollar relative to the US dollar, and that was based upon, in this panel here, is West Texas crude. And we saw rising energy prices, which helped to boost the Canadian dollar, also risk on as well at the same time. And you can see these two graphs are quite similar. West Texas crude does influence the price of the Canadian dollar. Obviously, there are other variables as well. The other key one would be the spread on the 2-year a Bank of Canada note versus the U.S. Treasury note as well tends to also have an impact as well, and other variables. But energy definitely does have a big factor to play as far as the overall value. And if we take a look here at the yield on the 10-year Treasury note, we're still in this upward trend channel here. We haven't broken above or below this trend channel here. And we do close at 120. You'd have to go back to February last year to come up to 120 for the 10-year Treasury note. So what we've seen is we've seen a rally taking place in the as far as yields go, as investors have really pushed this reflationary theme in the marketplace overall. And it's a key theme because it's really a differentiating factor in some of these sectors' performance as well. I also want to take a look at, if you take a look here at some earnings last week and also some economic reports as well, and also a little bit of seasonality as we go through this as well. Cisco last week reported its fifth straight quarter of shares. Let's just get this going. Fifth straight quarter of revenue declines, which is just huge. Now, Cisco was a darling of the 1999 tech bubble, and today it's struggling in this climate here as well. And you can see that here, Cisco on an absolute basis here, that Cisco has been not performing well on an absolute basis, and relative to the S&P 500, you can see here that it's actually underperformed. And even after the news last week, we did see this underperformance relative to the overall market, as you'd expect, with another revenue decline overall. And Coca-Cola is not seasonal at this time. It's a consumer staples company. It does have some discretionary elements. In fact, if you take a look at the why it said its revenue is falling, was its movie theater business, its restaurant business, and also its sporting venues as well. Coca-Cola tends to do better in the transition months, so it would be late April until late May would tend to be the better time overall from a seasonal basis for Coca-Cola. But Coca-Cola did actually, if you take a look at this top graph here, did well last week at the same time, and it also outperformed the S&P 500 on its news at the same time, and that could be because it hasn't done well overall during this recovery of the pandemic as well. If we take a look at Cisco here, I should say Disney, if you look at this headline, smashes streaming subscriber expectations, boosting business hurt by COVID. Sounds fantastic. And Disney's a great company. They've really benefited overall. But let's take a look at the actual performance of Disney relative to the S&P 500 here. And I want to point out how this fits in with the seasonal period for Disney. So this second graph is the performance of Disney relative to the S&P 500. Look at the performance here, going all the way up here from late October, or I should say early October, into the end of the year last year. It was just a huge performance. And guess when the seasonal period is for Disney? At the beginning of October into mid-February, which we're at right now. So Disney's performed extremely well in its seasonal period. But we're just exiting that seasonal period right now. And last week, interestingly enough, despite its good results, net after it reported its earnings, it underperformed the S&P 500. If you take a look at Tesla here, last week it announced that it used its cash, $1.5 billion to buy Bitcoin previously. Now, it made more on the day that it announced this, that it purchased Bitcoin, than it's made in the last 10 years selling cars, and also too as well selling environmental credits as well. So made a lot of money, but investors weren't really excited about it because Tesla tends to be a volatile company. And on top of it, Bitcoin tends to be volatile. So you put two volatile things together, investors start getting confused and go, well, what am I buying? Am I buying a car tech company? Am I buying, Bitcoin? And what's going to drive this company? And we did see that performance overall for Tesla. If you take a look here, we did see underperformance relative to the overall market once it had made this announcement, despite it actually boosting the value of the company because of the Bitcoin rise as well. If we take a look at Brookfield Asset Management reports on its Q4 earnings, profits up from a year ago, and also raises its dividend. Great company, strong company overall, well thought of, well regarded. We are in the seasonal period where it's a conglomerate as well, so it's a little bit hard with its different sectors to come up with a seasonal period, but generally speaking, you tend to find this company actually performing well into May. And you can see here last week that investors did like what they saw, especially with the dividend raise. Well-structured company and a well-run company. Interpipeline surges on Brookfield Infrastructure hostile bid. Now, obviously, the Interpipeline went up because it's a beneficiary of this process, which is still ongoing at this time. Brookfield, if you take a look at its performance in the infrastructure, you can see here that infrastructure actually does well from a seasonal period at this time of the year into May. And we've seen a little bit of choppiness where it's actually been up and down relative to the market overall. And then last week, after its announcement, we did see that downturn that took place. So investors are saying, well, we're not too sure about really this whole process and how it's going to add value at this point. We are at the bottom of this trading channel relative to the broad market for the company as well. But on a seasonal basis, it tends to perform well until early May. If we take a look at Enbridge, reports higher Q4 profit despite Line 3 costs going up, and another $1 billion, and some court problems in Minnesota are going to put a little damper on the company overall. From a seasonal basis, typically it's in the energy transportation business, and you'd find that a company like Enbridge would actually perform well towards the end of the energy seasonal cycle, which would be in late April into May, and perhaps maybe even into June, depending on what's happening with energy as well. But we did see last week relative to the broad market, we did see the underperformance once this announcement was made as well. Restaurant Brands International last week reports its Q4 profit. Revenue down from a year earlier. And if you take a look on an absolute basis, you can see here that it's negative since 2019, and it's been underperforming the market. On a risk-on environment, this is not something that investors are really looking for typically. TELUS reports its fourth quarter profit down from a year ago. A lot of companies are making money. TELUS actually lost a little bit here, and revenue crept higher overall. Investors didn't like that news, and if you take a look at what took place here, we did see that pullback here on TELUS. So, and interestingly enough, relative to the broad market, we did see going into the pandemic, into the March bottom, we did see an outperformance from TELUS as investors were really caught up in the overall I want to stay invested, but I went somewhere safer, and they did go to TELUS. But once that ended and the whole market started to rally, TELUS underperformed, like so many other sectors, like the consumer staples sector as well. And it's actually been doing okay recently, but the news on last week did actually put a damper on it. Now, TELUS, haven't done TELUS from a seasonal perspective before an analysis. But if we take a look at Rogers, which is in my latest book, you'll see that it's really from late April to late May, the telecommunications companies in Canada particularly, that can actually do quite well. So that's where I'd really be looking from, expecting from a seasonal basis for TELUS to outperform. If we take a look at what happened last week, we can see here that once again the oil draw was actually bigger. So we had this bigger oil draw than expected. But on the other hand too, gasoline stocks went up. And overall net, investors looked at this and said, you know what, this oil draw is bigger than the impact on gasoline, and really start to push the energy sector up higher. Bumble last week launched its dating app here, and it opened at $43. Now, it went up 76% in its debut, okay? And if we take a look at the price action for Bumble, which is a dating app, basically, and if you take a look here, this is the action on Thursday. We can see here that it was a positive day, and opened up, from its expectations, which would be, well, really down here actually, and opened up here substantially higher and ended the day higher as well. And on Friday actually did quite well. Again, still held its value and moved up slightly as well. So investors on this one swiped right, and they love this vehicle for the risk-on move. Draghi last week takes over as Italian premier. Now, this is not Draghi, this is somebody else, But I just want to point out that the central bankers are coming back. They want people that are willing to help print money for the coming recovery. Yellen, talking about money printing. Yellen last week downplays inflation fears. Has anybody noticed that everybody's talking about, the central bankers are all talking about, well, don't worry about inflation. No, don't worry about inflation. And everybody's looking around going, yeah, the expectations are moving higher at this point. We see a lot of things going up in inflation, whether it's housing, whether it's food, but yet we're seeing Yellen and others come out, oh, inflation's not a problem. Don't worry, And if we also, too, we saw last week, we saw Powell actually come out and say patiently accommodative monetary policy stance to help with growth. And he, too, basically said, don't worry about inflation. We got lots of tools. If it ever comes up, I'm not sure I really believe him, but once again, the central bankers are all parroting the same thing at this time. And last week as well, we did see the Bank of Canada, Tim Lane, the Deputy Governor of the Bank of Canada, step in and say that cryptocurrency boom is speculative mania, which is unusual for a central bank to really make such a statement. Interesting, he didn't comment on any of the other bubbles, housing, stock market, whatever it is, but chose cryptocurrency. And I found that kind of interesting. And it was basically a speech that said, trust me, if we come up with a digital currency, it'll be much better. This is just a mania. Just a comment overall. I found it interesting coming from the Bank of Canada. And if we take a look overall, last week's price action, it was positive once again for the overall markets. Energy was a big winner. We saw a risk-on move as well for overall in the markets. It's defensive sectors underperformed. We still are in that strong seasonal period for the overall markets here. We're all-time highs, and we can move higher from here. We have to watch out for the price action here, but right now investors want to be invested. We're not seeing any pullback at all, any hints from the central bankers coming out and saying, we have to be cautious. They're saying exactly the opposite. I know some of the central bankers and the governors of the Federal Reserve Board in the States recently been talking about, well, maybe we'll start tapering a little bit, or thinking about tapering, I should say, perhaps at the end of the year. And Powell came out on Wednesday and basically slapped them down on that and said, no, we're keeping our foot down to the pedal here to help out. We don't see a problem, and if there ever is a problem, we can deal with it later on. And the markets are liking what they hear overall. And of course, things can change at any time, but right now we are seeing some positive price action taking place. Thank you very much for joining me today.